The company recently undertook a funding requirements review to determine where best to allocate shareholders' funds to create long and short-term shareholder value. It was focused on what our requirements were for development of the Fortuna deposit, but also our medium-term funding requirements for our joint ventures with our Chinese partners. We consulted a number of shareholders who expressed a keen desire for a capital return, and with a review of what are the requirements in the medium term, we determined 4 cents per share was the appropriate level to ensure that we had enough for development of Fortuna deposit, but also met our medium-term funding requirements under our joint ventures. The 4 cents return equates to about $9.3 million. Our balance at the end of the last quarter was $42.1 million, leaving us with over $30 million after the capital return, which is sufficient to conduct our operations. The Fortuna deposit is 100% owned by Bauxite Resources and not subject to any joint venture arrangements. It is close to existing rail and port infrastructure and logistically close to China, which is the biggest consumer of bauxite in the world. Since we released our initial maiden resource in May 2013, we've been slowly growing that deposit. But also the recent announcement has had a material increase in the grades, available alumina at 32.1%, which helps the project economics and supports further work being done on that development. We've just recently appointed AMC to do the scoping study on a pit-to-port basis to prove up both for the geology, infrastructure, mining operations and the economics to see if that will support a development. That will take a period of 2 to 3 months. In conjunction with that, we've appointed BAX, which is a group that has significant experience in technical marketing for bauxite worldwide, and they'll examine the value in use and also technical parameters of working with targeting several refineries in China where we could target this product. The bauxite market over the last 6 to 12 months has been quite a dynamic environment. We've seen longer term demand forecasts of being strong. CRU forecast the growth from 2012 to 2022 moving from 35 million tonnes of imported bauxite into China to a level of 95 million in 2022. On top of that, recently you've had the Indonesian bauxite ban, which has led to a view of shorter term shortages. However, during 2013 there was a significant build-up of inventories from Indonesia into China. Estimates were about 12 months stockpile. However, over the last 4 to 5 months that is decreased and there is a looming shortage coming up. We've seen recent strengthening in prices, still with significant inventories in place. So for us, it all goes well for the future, for longer term demand to support the development of our project. Australia and Indonesia are logistically very favourably placed to supply the bauxite market. As a bulk commodity, bauxite requires low cost transportation. Darling Range bauxite is around 4,300 nautical miles from the eastern seaboards in China, whereas one of the other sources of bauxite is Guinea, which is about 11,000 nautical miles. So the economics from a transportation perspective favour closer sources of bauxite. Bauxite Resources has a number of projects for development of bauxite. Obviously the first one which we're trying to develop is the Fortuna deposit, which we are working on and progressing. It's about a 2-year timeline subject to regulatory and approvals and economics. And we see that we'll be able to supply into a higher demand bauxite market when that comes on stream. But it's not just only the Fortuna deposit. We have joint venture arrangements with Yankuang and HD Mining, which has a pipeline of potential projects which could supply at an increasing rate into the future any bauxite demand that is required from China. And we have significant resources currently sitting at around 380 million tonnes between us and our joint venture partners.